because these patterns, like the ones we're talking about right now, generally take weeks, if not months, to form. And months meaning to be valid. Most people don't consider anything below 3 months. In this case, this was 4 months. That's just a rule of thumb. But so really the breakout is what determines, hey, this is now a double bottom. In this, so what we're looking at on this specific chart is a daily chart. So this is a daily. So you said if it closes above, what kind of time frame candle? It depends on the time frame you're looking at. Okay. This is daily. But like I said, these are big patterns, and generally I want to see them either on a daily chart or a weekly chart. Can you find double bottoms and all the patterns that we talk about in small charts? Will you see them? Yeah, because your brain will be trained. But the thing is like those are generally not reliable, because on small time frames, there can be a lot of volatility, and it's just not as consistent. Okay. So I'm usually looking at double bottoms or anything we're about to talk about on longer time frames. Okay. For these classical charting patterns. So daily, weekly, monthly. Okay. Because I just want to see the overall trend. Where is it going, right? Like, what is the momentum that's trying to be wound up in a daily, weekly, or monthly chart? Okay. Double top. Same principle. Exact same principle as a double bottom, except in reverse. Okay. Here you have a bullish pattern. It's coming up. And then all of a sudden, what happens? Range bound market touches the top twice. Just because something touches the top twice doesn't make it, like, people are just like, oh, that's a double top. Just because that happens doesn't mean that it's a double top. Because in this specific instance, I'd be looking to buy the bottom of the channel. Guess what? That shit didn't happen. So now, because it broke through the bottom like that, okay, and we didn't even have any kind of like real bounce. Once that starts to happen, and I see like the second candle is now red too, like I could wait for a third candle to be a seller, but I could sell that, because I would expect that once this bullish pattern was shattered, it's going to come where? Back to the scene of the crime, wherever that is on the left-hand side. Okay, but that would not be the primary expectation. So you see how double bottoms and double tops have characteristics of a range-bound market. And the bias, even though the bias tells us something, is not always correct. Do you understand that? So I wanted to also point that out, because again, I want to instill in you that this is an art form and it's not 100% rules based. We apply when I do technical analysis, I stick to a very strict set of rules. Okay. There's no deviating from them, because that's just how I am. I'm systematic in nature. Cup and handle, this is what it looks like. And I'll put that in air quotes, because like, yes, in hindsight, you can see a cup and handle. It's really, in my opinion, from what I've seen, it's hard to do this, but this is the picture of it. It looks like a cup with a little handle. That's where it comes from, like a little teacup. It can be a big teacup. Like, doesn't matter. But the point is that if you see a cup and handle and it breaks out, okay, like this, that's bullish. You're buying basically on strength at that point. Okay. If it fails, let's say it failed against the handle, where's it going to come? All the way back down to here. Okay. So if it closes above basically resistance, okay, but see how all of these patterns that have all of these names, what's the characteristic? Characteristic is it's still a fucking range bound market, no matter what way you slice it. Okay, so closes above, it's bullish. Closes below, if it started to fail up here, we could look to sell the range. And if it breaks that range, we know it's going to come back down to the low. Period. Okay. But all these names for stuff is, I don't know. They're not. It's all in how people, I guess, tilted the paper back then. I don't know. I mean, there is some credence to some of it, but it's generally hard to see in like foresight. Okay. So the next thing we're going to talk about is, I can actually get out of this, thank God. The next thing we want to talk about is ascending triangle and descending triangle. And what I call an asymmetrical triangle, but most people call it symmetrical. I say asymmetrical because it's always going to be determined by what the input is. So an ascending triangle usually looks like this. Okay. And the anticipation, the expectation of an ascending triangle is that it does something like this. Breaks out to the upside. It's considered to be a bullish pattern. Now, if I saw a tail coming in negatively, what am I expecting of the ascending triangle? So bars are coming down into it and then it starts to make an ascending triangle. What is my expectation? Should this pattern work or not work? It shouldn't work. It should fail. Okay, which means on these tops, okay, I'd be looking to sell back down to whatever this established is, and then I would expect as it crunches to move lower. Now, this is completely different than what's taught in textbooks, okay, because ascending triangles can be seen as, to most people, oh, it's a reversal of trend. No, it's not, because this, to me, always generally gives it away. Okay, I can see this starting to form. Can I be a buyer here? Oh, sure, absolutely. I just need to be cautious that the primary trend that's making up this facade, if you will, is bearish. Okay, and this is completely contradictory. Okay, if I had an ascending triangle that formed its range, that was terribly drawn, I'm sorry, but with a bullish bias, okay, then I would be looking for what? Buying opportunities or buying OPs. Okay, another one which gets a bad rep is a descending triangle, and because it has the word descending in it, what is the presumption? The presumption is that the market should go down. Okay, but if a descending triangle is formed from a bullish basis, okay, and you can do this with the ascending triangle, what I'm looking for is it to do this and then generally pops back up. So one test out, right back up. How many people are going to be selling into that? A shit ton, because they see the same thing. Okay, but I'm waiting for confirmation of the breakdown. Okay, if I see a bullish bias and it comes down here like this and it pops straight back up and it starts to do this, I'm buying this with a risk below that. Okay, I'm anticipating that this fails and I'm looking for it to fail. Retest, come back up, and then boom, right back up. And come where? All the way back down, or all the way up to the scene of the crime, or in this case, the triangle. Same thing with an ascending triangle. If we had a descending triangle that looks like this and it has a bearish bias, I can look to sell this either on bounces off of here, obviously, or I can look for it to do something like this, fail test, and then look for it to move down. And generally speaking, with triangles, if you want to make targets for yourself, you would take the length of whatever this is and flip it. So in a descending triangle, if in this case with a bearish bias, we would take this length, copy it, and paste it, and that would be our target. Okay? Or in this situation, we had a descending triangle with a bullish, same thing, we copy and paste it above. Okay? Those could be your targets if you want. If, like I said, when something fails, it generally comes back down to the scene of the crime. Okay? Or up to the scene of the crime. All right? Do we all understand this? Is this clear or is it confusing? Good. All right. So now we're going to talk about patterns that I have come up with. Okay. Oh, actually, before we do that, let's go into flag patterns. Okay. So in a bull flag situation, the market just looks parabolic. It goes up and it creates something like this. This is what's known as a bull flag. All right. And it's going to rotate like this. And the primary expectation for this is it moves up like that. Okay. Now, if basically where it's supposed to break out, we'll call it, if it starts to fail under and it just starts to do something like this and it can't even like go back up into it, you can look to sell that. Okay. Because if this starts to happen, there's a good likelihood it will move all the way back down to the scene of the crime. In a bear flag, okay, looks like, whoops, don't want to draw it that way. So let me get rid of that. So a bear flag looks like this. All right, bearish bias, market moves straight down, starts to do something like this. Okay. We can look to sell at these points, of course, but we're looking for it basically to do that. Okay? Continuation down. All right? So that's a bull flag, expectation breakout, bear flag, expectation down. So you have just massive selling, it starts to range, and it keeps failing. Okay? This is an ideal entry right here on a retest fail for confirmation. Like I said, you can always sell it up here, but like, you know, same thing goes though, if it starts to do something like this and it starts to move up, understand that that's going to be the target. The stem is going to be the target. Okay. Alan, it depends on you. Some people can trade off of this and some people can't. What's the probability percentage difference between flag tops and bottoms? You have to rephrase that question, Rome. Going back to Alan's thing, like I said, you need to understand market structure before you even start to make anything. So this is a way of seeing market structure. Okay. So another pattern that I've come up with is a variation. So this is what I call a spike in channel. Okay. So a spike in channel up looks like this. The primary expectation is we look for price to move down here, find buyers, and continue upwards. Okay. The secondary is that if they move down here and they start to fail against that, we would expect it to move all the way back down to the scene of the crime. Okay. So this is a spike in channel bull. Spike in channel bear looks like this, which is the primary expectation is it rotates down and it moves back up to here, and we look to sell, and then we look for it to break through. The secondary is it moves up to this point again. If it starts to rotate above this area or hold above this area, we would then anticipate it to move back up to the scene of the crime. Okay? Another pattern is what I like to call an iron gate, and these are, like I said, spike and channel is my pattern, and this pattern is mine also too. These patterns, an iron gate doesn't happen all the time, but when it does, what it does tell you is you'll see sometimes like the market will come down and then it will like rotate up, and then it does something where it looks like this. Okay, I'm going to show you an example of this. But it's got basically long legs on the top, long legs on the bottom, and it does this weird like sideways action. Okay. And I never knew, like I would see this sometimes. I'm like, what the hell is it doing? Like I've never seen a pattern ever described as this. So from watching it over and over and over again, this is what's called an iron. I call it an iron gate, and it's bullish. Or this is what's called seller's last stand. Okay, meaning if price moves down here and buyers push it back through and they break above that like little gate area, like a field goal, the market is gonna go ballistic. Okay, because there was just so much pressure to keep it down, and it just completely failed. And in a reverse iron gate, someone called this the guillotine one time. It's like, I don't know if I would say that, but the other iron gate is this is buyer's last stand. Okay, it does something like this where it makes these long tails and it like has this really tight trading range. Okay, so if the market moves up and it fails and it starts to just crumble through that area, you will see massive selling pressure. Okay, so those are my kind of two other patterns. And now let me go over to the questions again. You said you can sell on the top or the bottom. That's only in a range bound market. And then if that market starts to basically cross above a trend line, like an established trend line, then it's most likely to go back to the scene of the crime. Okay. And for those of you who are like, well, why are we learning this stuff? It's because remember that coming up, I'm not giving you guys like actual trading systems ever. But in order to be able to creatively make stuff, like, you need to understand the basics. Okay. So that's why we're kind of going over it. And there are some people who trade like this. They use my patterns and stuff and they're fine. Okay. So let me go back here. Can you show recent iron gate pattern? I will be recorded if you didn't catch it. Okay. All right. So first thing we want to do is I want to make sure I have my drawing tool. That I can't do. Yeah, they apply to almost every market. I can't really think of any market that it wouldn't apply to. And don't worry, you guys are going to be doing homework for me where you get to find all of these and do them yourselves and write stuff out for me. So I can make sure you actually understand what I'm telling you. Okay. So, all right, let me see if I can draw. Can I draw? Of course I can't. Why would anything ever work out perfectly? That's okay. That looks terrible. Yeah. Well, it's just nothing ever works perfectly. because it just keeps going back. This is so freaking annoying. All right, I'll try to make do with what TradeStation gives me, but that's going to be hard. No, see, I deleted some kind of file because it was just kept like readjusting itself. And I shouldn't have done that, but it works out like 99% of the time better for me that it doesn't constantly try to resize on the screen. But in this specific case, it's working against me quite well. Okay. All right, so the first thing we want to look at is a weekly chart of the E-mini S&P 500. So what happened over like the last 2 years? Okay. And even though everyone was freaking out and saying the market's going to go to zero, is essentially in 2015 through 2014 to 2015, we started to establish this range. Okay. And what do you see? Well, this is a range bound market with like a bullish bias. All right. So within that, and I'll try to use this pen tool here. So we have like a bullish bias. Oh, of course, you're like the lightest blue color ever. Okay, so we have this kind of like bullish bias to it. All right, and then what ends up happening is we start to make kind of like a double bottom. And I can't. It's going to drive me insane. So we make this kind of like double bottom like right here in the middle of the graph. Yeah, I realized you disconnected. That's fine. And you see like right across the top here, and this is on a weekly chart, by the way, so this is like almost a year of bottoming. So you see right there, it closes above, and this is the presidential election right here, and then it just takes off. Okay? So the cool part is this is a range bound market, bullish bias, with a double bottom that looks like a double bottom, and it broke out and took off. Okay. Do we all see that? Do you all see where I'm like pointing? I really wish I could use my thing. Like it won't, unless I may have a workaround for this. Or not. Sad face. All right. Anyways, so that's that there. And that's just like one of many examples. Okay. And then we also have, if we come down into like a 6,000 tick chart, this may take a while for the data to load, but that's okay. But essentially, the E-mini S&P, for example, okay, the E-mini S&P has kind of been in this like range bound market. Now this is a smaller time frame, right? Because we're on tick charts. So this is a range bound market again. Okay, but something interesting in my opinion has happened, which is, yes, it's a range bound market bullish bias, so we're just looking to keep buying around this area and get out at the top, which has worked out quite well over the last month or so. But, and I just need to change the color of this to blue, and I need to make that a thicker line. But this is also then inside of this range bound market, we're starting to see like this is a bear flag. Okay, so you can see it's, yes, it comes down, all right, it finds buyers, it pushes off. Okay, now it's pushes through kind of the range and hits the bottom of the channel. So can you sell out the range bound market here? Sure. Okay, your target is going to be the midline, which is like 2470, and your second target is going to be here. Your last target is going to be if this range collapses, you're going to see it capitulate all the way back down to the scene of the crime, which is about 2450. Okay. And then, yes, Marcus, like you'll see in this same chart, there's no real good way for me to draw lines, but I'm going to try. Okay. I'm going to try. Stop moving over there. So let me see. Make this line thick and make that line straight. Okay. So you can see that you have this kind of like iron gate as well. You see this one long side and another long side. So what this means essentially is this is buyer's last stand, or I'm sorry, seller's last stand. So if this gets taken, okay, up here, you'll see that the market will most likely continue to make new highs, if not get to 2,500. Okay, because people are just so sick and tired of being wrong, essentially. That's what's actually happening here. Okay, so there's that as well. Another chart we want to look at that kind of brings this all together with a different pattern on it is we're going to go to gold, and we want to go to a weekly chart of gold, a tick chart. Okay, so a weekly chart of gold actually has a spike in channel down. I've got to save this because it's going to drive me insane. All right, make a new parallel. So we have a spike in channel down in this case. We're going to draw the retracement zone of what we want. Okay, so you see how it spikes down. There's lots of spiking that's going down, and this is spiking channel down. So at some point, there's a weekly chart, which is going to take time. At some point, we would anticipate that gold gets back to about 1500 retest, and that would be like an optimum on a long time frame sell point. Okay. The other part is this also makes a it's going to be really hard for me to draw with these tools. Okay. The other point, and I'm going to make this a different color so we don't get confused. Okay. So the other thing that you'll see is that this is also happens to be a what? A descending triangle, right? With a bullish bias. Do you guys see that? Okay. So a descending triangle, bullish bias. All right. What does that mean? We anticipated when gold came down here, we were looking for it to close above here. And that was that massive run in gold. Okay. So it comes back up, and then you see how it keeps coming down, one test out, and now it's crossing over this descending triangle. So around, we can call it 1220 or whatever you want to call it. Okay. Somewhere around here. If it pulls back and it starts to form around here, we would anticipate this shatters the descending triangle. So no bearish bias. We anticipated it to fail, which it did. And now we should start to see it rotate over here, hold about 1200, we'll call it, and start to move towards this $1,500 area. Do you guys see all that? So you see the spike in channel down, which means it's a bearish bias. Our goal for that spike in channel down is going to be 1500. We have a long-term descending triangle over years going back to 2010 with a bullish bias, okay? Which means that when it busted out through here, could we have sold the bottom? Sure. Okay, first test out, right back up, fail. You're within your rights to sell. Okay, comes back down, it holds. It's going to test up again. Do we just blindly sell into that line? No, there's no proof. And then it closes above. We can start to look to buy that. Okay. Which retracement zone? This green one? The green one is because of the spike in channel down. I just went over what a spike in channel down was. Spike in channel down is bearish. Okay. Spike in channel down is bearish. It has a stem that's like right there. Okay. So it has a stem right there, comes down into a channel. That's a spike in channel down. Okay. The anticipation is that it moves back up to 1500, and that's going to present a sell point, and it should come back down again. Okay. That's how I got that line. Do you see how that was drawn? The other thing that tells us that this may also be happening is because inside of this spike in channel, which has taken basically years to create, okay, is all inside of a massive descending triangle with a bullish bias, which means unlike what everyone was trying to do here, which was sell this, okay, because they saw this most likely, at least higher time frame traders would see that. They were wrong because the bias was bullish. And really, if I saw something like this, and even if gold came down to here and it's, started to sell off, I still wouldn't sell it. Okay. Because I'm looking to buy it, or my hypothesis number one is wrong. Okay. Then that's so be it. I don't give a shit. Okay. So then it does this. It closes. I'm buying this, and it takes off. Okay, this run from about like 1200 to 1400 was super profitable for me. Okay, and my family. Okay, so the thing is that it's not rocket science in this sense. It's just I'm looking at a much wider perspective than most of you have probably ever opened your eyes to. And we can use long-term time frames and drill them down into short-term time frames to help us show us where major support and resistance is versus just like I'm trading a 1 minute chart. Okay. What do you mean you don't know where the line is? The line is right here. Are you not seeing this green line? Okay. If you really want to be scrupulous about this, you can, what I like to do is do what's known as zone of confidence, which is, this is where I expect the retracement to be, somewhere between 1427 and 1500 in this case. And why? Because when this came straight down, it started to bounce in here, and now it's moved off that channel. So this is basically a bearish channel with a, bearish bias, which then I call a spike in channel, and I would anticipate to see price move somewhere in between here, fail, and continue to rotate lower. No, I never, because I'm trading for days at a time, Norman, usually. So like the lowest chart time frame I will ever look at or even consider at looking at is like a 1 hour. Okay? If you believe you can trade a 1 minute and a 15-minute chart, God bless you. Okay? Or whoever blesses you. Because understand that trend is a function of time, and you can never escape that fact. So you'll see day traders be like, oh, I made, $1,000 today. Well, it's like, okay, yeah, but you also put up like $100,000 to make $1,000. Like, that is kind of shitty. Okay. So, these are just different patterns, and for a lot of you, like, this may seem like, what the hell? And that's just because you've only seen it once, so you're gonna have to watch it over and over again. You should do it like the way I just did it, Trading Bell, which is, this is a spike in channel down, and there's like a confidence zone of where we should see sellers show up. So, I mean, this is important stuff, because even in systems trading, sometimes you may find yourself, okay, because remember, algorithms are only programmed to do what they're supposed to do, right? So sometimes in a highly volatile, like, freak accident kind of thing, like something unexpected, like a nuclear bomb goes off, okay? Or even sometimes, like, they may get long or short on something, and because I study charts too, it's like, I don't really know about that, okay? And I may not do anything, but I still keep track of the human side as well as the mechanical side, and I try never to really interfere with the mechanical side, but there has been times where I have pulled the algos because I'm just like, not the ones that you guys trade, but my own other ones where I've pulled them. Like 1% of the time I'll pull them because I'm just like, no. Okay? Because you can get in uncharted territory. All right? So this stuff is important for two reasons. One, it helps with your understanding of how to construct the market as a whole, in the way at least I see it. Secondly, because of that, it will help you start to break down the market, and honestly, that is the first step of creativity to actually create something in terms of a system. Yeah, there's no Trading Bell, there's no exact area. It's somewhere in between here, okay? Because the channel started literally right here. Do you see like this inflection point right here? The market started making a channel this way. So you see how price was pretty much just straight down right there, and then it makes a channel, so it's basically at the crux of the channel. Okay? We're not trying to predict the market within a tick. It's impossible. But what we are trying to do is establish that this area we would anticipate the market retraces and tests and fails and then starts to move down again. Okay. And we also have another pattern within a pattern, which is telling us like, this is a massive descending triangle. It's one of the biggest descending triangles I have ever seen. Okay. And it's got a bullish bias to it, which means it's bullish essentially to me. And when it started to do this, I was looking to buy gold. Okay. If it just collapsed back down to the scene of the crime, okay, so be it. I don't care. All right. Now I could take this same side and I could put it here and I could extend it, which is just really going to give me back all the way. So if it gets above 1500, okay, I guarantee you if it gets above 1500, well, I can't guarantee you, but I would say for the most part, if it gets above 1500, then and people are willing to buy it there, it's going all the way back to the scene of the crime, which is about like 1900. Okay, which is levels that haven't been seen since, the collapse. All right. So, is this making sense to some of you? It seems like. All right. But so your homework for me is going to be, finding all of these patterns that we talked about, giving me hypothesis number 1 and hypothesis number 2, and sending that to me, okay, via email. And once the video is like loaded, then what I will do is I will also just give you guys like a sheet of all the patterns that I want, and then you can go on your merry way and do that. Does that sound like a fair deal? So, pattern name, primary hypothesis, secondary hypothesis, targets, stop losses, and like a whole plan. Okay. You need to write it in a Word file, and you need to name it with your name. You can label this, homework number 1 if you want. Okay. And it needs to be in a Word doc or a PDF file. And you need to list each of all the things we talked about and give me a primary hypothesis and a secondary hypothesis. Pages is fine. Okay. So I will be able to tell for those of you who don't do the homework and you did it at the last minute, because this will take a while. And the reason I have people do this is because, 1, it lets me know, are you paying attention? And the second thing is, did you understand what we talked about? Okay. It's nice to hear something, but I often find that most people have no idea. They just listen to something and they think they know stuff. Okay. So, and that'll be that. Are there any questions on this? No, Rom, you really got to get out of the mindset of like day trading, bud. I don't day trade. When I say I look at a 1 hour chart, it's really just to see, okay, is the trend in the short run starting to shift? That's all I use it for. Because like a daily or a weekly chart takes a while for the trend to look like it's shifting. And I'll look at like a 4 or a 1 hour and be like, okay, is the trend starting to shift? Because those will be more reactive. But they also come with a consequence as well, which is like it's completely falsified. So that's something for a later date. All right, cool. So I apologize about all the technical difficulties, and I wasn't on my normal computer because I had the AC guy doing stuff. So really, Alan, the art of technical analysis takes a while, and that's why I kind of have you do your homework so that like you see these patterns with really ever out, not thinking about it. It just takes, I don't think it takes that much time. I would say in total to learn all the patterns and be able to see them at will, like without even trying, probably takes about 20 hours of just like seeing them. The homework is going to be due Thursday at 6 p.m. Eastern Standard Time. Will we be looking at setting us in TradeStation? Patterns seem to be easier to see on the setting you have for price. Sure, we can look at that next week. So. All right. Well, you all have a wonderful rest of your day.